Thank you for joining us this Friday, the 3rd of June. I'm Sophia, a market analyst with Bell Direct. Well, ASX Lithium shares were outperforming since the Labor government won the federal election, with Labor introducing an electric car discount from the 1st of July. So this discount could make EVs $2,000 cheaper in the aim that more families would be able to afford them and to reduce emissions. However, this week, ASX Lithium shares fell deep in the red. Lithium tumbled in Wednesday's session with Auckland, IGO and Pilbara Minerals closing the day 12 to 16% lower. This came after news that Argentina set a reference price of $53 per kilogram for lithium carbonate exports, and Argentina has some of the largest lithium reserves. Also in lithium headlines this week was Chinese EV manufacturer BYD, which is in talks to purchase 6 lithium mines in Africa that may be able to supply it raw material for up to a decade. Goldman Sachs then released a bearish outlook for the medium term that worried investors. However, if you're a long-term lithium investor, you're probably feeling a little bit more optimistic. Over the last year, Pilbara Minerals is up more than 75%, IGO is up 46%, Auckland is up over 65%, and Liontown Resources is up 116%. Broker opinions have been mixed. Credit Suisse believe lithium prices will peak in the next few months, and Macquarie slightly reduced their EV sales forecast for 2022, however are still expecting 43% growth on last year. Now, the local market Monday to Thursday is slightly down 0.09%, with utilities, tech and financials lower. On the ASX 200, lithium stocks Pilbara Minerals, PLS and Auckland, AKE, declined the most this week, down 22% and 18% respectively. The best performing stock was the A2 milk company, A2M, its share price rising higher after the company applied for approval from the US Food and Drug Administration to supply infant milk formula. And this news follows Bubs Australia, BUB, whose shares soared higher after they signed a deal with the Biden administration to supply 1.5 million tonnes of infant milk formula to the US. Other top performing stocks on the ASX 200 this week included Beach Energy, BPT, South 32, S32, Woodside Energy, WDS, and Fortescue Metals, FMG. On the All Ords, Bubs Australia, BUB, was the second best performer following their agreement with the US, while the best performer was Lark Distilling, LRK, which gained over 30%. Now, the worst performer on the All Ords was Catapult Group, CAT, who provide wearable tracking solutions for elite athletes. Now, the company reported underlying FY22 EBITDA loss of $5.8 million US, which was greater than Bell Potter's forecast loss of $2.4 million US. Bell Potter have a hold rating on the stock and have lowered their price target to $1.10. And the most traded stocks by Bell Direct clients this week were James Hardie Industries, Lake Resources, Woolworths, Seek, and MMA Offshore. Clients also bought into Pilbara Minerals, BHP and ANZ, while took profits from Woodside Energy and New Farm. And the most traded ETFs this week were the Vanguard MSCI International Shares ETF, the Beta Shares Geared Australian Equity Hedge Fund, and the Vanguard Australian Shares ETF. End-to-end economic data to look out for next week includes the RBA's interest rate decision on Tuesday, when the central bank will announce whether they'll raise the cash rate further this month. And on Wednesday, NAB's business confidence data will be released, exemplifying sentiment in May across all industries. And that's all for this week. I'm Sophia with Bell Direct. Have a great Friday and enjoy your weekend.